Hello everyone and welcome to my daily report market analysis videos with me, Richard, Market Analyst at Hantec on Monday the 27th of January. There's been a real significant shift back into safety. Over the weekend, the number of reported deaths and also cases for this coronavirus in China is dramatically rising, and subsequently there's been a significant move out of anything on the riskier side of the spectrum. So we've seen the likes of gold sharply higher, that's $12 up now on gold. We've seen the yen outperforming in the forex space. We've seen treasury yields coming down lower on the 10-year to 3.5-month lows there, below that key sort of area where 1.7% seemed to mark a low in recent months, but that's now been decisively broken. And look at this move on the S&P 500, a big bearish engulfing candlestick pattern, turnaround, big reversal pattern. And we can see how the falling Treasury yields are now starting to finally drag on the market lower, and it seems as though risk appetite is really under pressure. The VIX volatility up over 17 again, and you can see this reflected through the sharp weakening of that Chinese yuan, where the dollar yuan rate is sort of approaching that 7 line, 7 point again against the dollar. So broadly speaking, equities under real pressure today, over around about 2% lower across the European space, and we're seeing just the general risk appetite being fairly negative. Now, in terms of data points today, we've had the German EFO numbers, which disappointed this morning. Look at this EFO data on the headline 95.9, worse than expected, and actually down from last month. And I can show you how that affected through the chart here. We saw that recent recovery in the German EFO numbers, which falling away. It seems as though the expectations component has been the big drag on there. Current conditions still okay. Maybe that's something to do with the coronavirus and the impact that the market is sort of anticipating further down the line. Later on today, we're looking at US new home sales, 730,000, so still pretty strong numbers there. It'll be interesting to see if that makes any real dent on this risk aversion that we're seeing today. We've got John Williams, Fed speaker, voter. He's a centrist, and he's speaking at 2:30 this afternoon. Now, looking at my charts today, which is dollar Swiss. Now, what we have seen is this recovery actually, up until today, the Swiss franc had been sort of starting to recede again in its strengthening. And it's interesting that this downtrend has been tested. This downtrend of the past 5 or 6 weeks is being tested. But look at the momentum indicators, those MACD lines, following on from some sort, I suppose you could argue, a bull kiss after a bull cross. Seems to be sort of pulling higher, as are the stochastics. RSI up at 5-6 week highs. It all does suggest that we are testing higher, and certainly the downtrend will come under pressure, I think, and that 97.30 level of the reaction high from last week will be certainly worth watching. That is the initial resistance, and you'd be saying in the course of the past week that little corrections are being bought into now on this dollar Swiss, and you'd be continuing to run that move with a sort of the support finding, if I can get my crosshair on it, 96.90, today's reaction low. If that holds, then that would continue this run of little higher lows that we've seen throughout. It's fairly positive actually through the hourly chart still. The Swiss franc not really gaining too much ground given its safe haven status, but certainly the Swiss franc has been in the last week or so under corrective pressure, and it'll be interesting to see if this real risk aversion really does turn the market around, or whether it's going to actually be giving a buying opportunity, because it looks as though that dollar Swissy is starting to think about turning a corner. As I said, 97.30 is the key line of support initially, but that reaction high at 97.62, that first lower high of the selling phase, that comes in, and that is your key level to watch out for, because if the market moves above that, then that really is a turnaround point. For now, it's just still playing out as a little bit of an unwind within a bear phase, but these little resistances, 97.30, 97.60, they are going to be important in the coming days, I think. So with improving momentum, this is one certainly to watch. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.